Asian markets mostly fell after a healthy week of trading, investors taking profit and keeping an eye on the novel coronavirus crisis. The Shanghai Composite in China rising a touch at 0.3%. China's decision to halve tariffs on $75 billion worth of U.S. goods had investors optimistic. But observers are saying that the coronavirus outbreak will batter the country's growth in the first quarter. Meantime, Hong Kong was down 0.3%, but it still ends the week about 4% higher. Meantime, Japan's shares ended lower in trade today, with the benchmark Nikkei average closing 0.2% down. Against the dollar, the yen is hovering just above a two-week low at 109.83 per dollar. Now, the South Korean Kospi is retreating from a two-week high in trade today. It's down more than 0.5% in trade. Among the biggest losers for stocks today, Hanwha Biopharma, that counter down by almost 16% in trade, and Duksung also making lots of losses today, almost 10% down in trade. Oil and metal prices, meantime, fell hard as the coronavirus outbreak gained pace. Brent crude edging higher after Russia announced its support for OPEC to cut its output amid falling demand. Now, the gold spot is also holding steady today, but it's still set to see its biggest weekly decline in 3 months, with the U.S. drop in unemployment benefits affecting the greenback. Now, South Korea has asked Chinese regional authorities to help its car plant factories in China to resume production. And it comes as the coronavirus outbreak disrupts production at South Korean car parts suppliers in China. Feeling the impact, car-making giant Hyundai Motor, well, it has already suspended most production in its South Korean plants, the first major car maker, in fact, outside of China to do so. Part suppliers in South Korea are also affected by the supply disruption in China. They include Hyundai, Mobis and Kumho Tire. South Korean authorities are saying that they will allow such suppliers in the country to work longer to make up for those shortfalls. But concerns are looming over a prolonged disruption. Will we see that? Because that would adversely affect smaller subcontractors. A South Korean supplier factory in Qingdao saw less than 2,000 workers going into work. Bear in mind, that's out of a workforce of roughly 10,000 employees. The workers refused to turn up in fear of the novel coronavirus. In an interesting turn of events, over the novel coronavirus, electronics giant Foxconn is switching part of its production to make surgical masks. The Taiwanese company makes electronic parts for global vendors, including Apple and Amazon. The novel coronavirus outbreak has led to a shortage of mask supplies around the world, and Foxconn aims to produce 2 million masks a day by the end of this month. The company has already started testing those masks produced at its manufacturing plant in Shenzhen, China. The masks will first be used to protect its workers from infection before extending to people beyond the company once full production kicks in. Clothing manufacturer Hongdu Group will also be refitting one of its factories to make disposable medical suits. It intends to produce about 60,000 protective suits a month. This development comes after several firms have shut down their factories in China over the coronavirus. China's mobile giants are said to be coming together to create an all-in-one platform to rival Google's Play Store. Reuters says that Xiaomi, Huawei, Oppo and Vivo will allow developers to simultaneously upload apps onto all their app stores. The Global Developer Service Alliance will give developers easier access to overseas markets like India and Indonesia. The launch was targeted for March, but could be affected by the coronavirus outbreak. The four companies' combined handset shipments are said to make up more than 40% of the world's smartphone market. Analysts say that the telcos are attempting to gain more market share in software and services as hardware sales slow down.